So you have joined in the perfect time. Let's start today's class. So in the last three classes, we have done a quick revision of whatever we have studied till now. But in today's class, we are not going to do any revision because today we have so many things to cover, right? So without wasting much time, let's straight jump into the class. The first thing today we are going to study is investment of assets, right, which comes under section 27. But before understanding that, first we need to understand what are the relevant benefits which are provided by any insurance company to the insured person or to the policy holder, right? So one thing that everybody knows is that insurance companies, they provide you with cover, right? Cover against any uncertain event, right? But apart from that, there are two more benefits, right? What is the first benefit? The first benefit is cover for maturity. Here you can see, so this says that if you are giving like 15,000 per annum, your rupees as the premium for 10 years, right? And for example, at the end of 10 years, luckily, whatever event you were insuring for, that event didn't happen. So at the end of 10 years, you are going to get 1 crore rupees. So what is this 1 crore rupees? This is the maturity value, right? This is the maturity value. So similarly, apart from getting this maturity value, we are going to get what? We are also going to get a surrender value. Now, understand very nicely. In earlier days when Insurance Act had just come into the existence, so at that time people used to pay the premium amount, and along with that people used to think that this is an expenditure. They didn't used to consider this as a saving or as an investment. They used to consider this as an expenditure, right? So gradually what happened, people started withdrawing their money from insurance industry, and this gradually, राहुल, ये नोट्स कहाँ से मिलेंगे मुझे? ये नोट्स मिलने के लिए तुम्हें क्लासेस अटेंड करने पड़ेंगे, एंड एट द एंड ऑफ दिस इंश्योरेंस लॉ सीरीज you can send me a mail on my email id, and I'll provide you with the notes there. Do let me know your full name so that at the end I can get an idea that yes, you have attended the classes. Yeah. So what is surrender value? Yeah, so I was saying that what happened, people started withdrawing their money from the insurance sector, right? So what happened, insurance industries, insurance companies came with another provision. Okay, Rahul, I'll share my email id, but let me first complete the concept. After that, I'll provide you with my email id. Okay. So कहाँ थी मैं? Yeah, so people started withdrawing their money from insurance industry. So what happened, at that time Insurance Act came with another provision which provided one more benefit to the insurer, which is surrender value, which means, for example, you have taken a policy where you have to pay a premium of rupees 15,000 or 10,000 for 10 years, and after 10 years you are going to get a maturity amount. But for example, at the year 7, what happened, you were facing some financial difficulties, and you thought of not continuing the policy, right? So you thought that no, after 7 years I want to avoid this policy. So at that time also you will get a lump sum amount which is known as your surrender value. Why? Because you are surrendering the policy before the maturity years. You are surrendering the policy, right? So for that only you are getting one surrender value, which is known as which is, for example, at 50 to 60 lakhs. Okay, this is your surrender value. So this is again another benefit where you don't have to wait till the end of 10 years, right? Even in the middle you will surrender the policy and you are going to get some amount. Okay, this surrender value will not be as profitable as the cover value, but yes, you will get some amount of surrender value. But what happened, after this particular provision came into existence, people started misusing this by surrendering their policies frequently. So what happened, insurance industry came with another provision, which is the loan against the surrender value. loan against the surrender value. Now what is this? So this means that you don't really need to surrender your policy, but you can get a loan against this surrender value, against this surrender value. But one condition is there. It says that your surrender value must be decided. मतलब ऐसा नहीं होना चाहिए कि surrender value का पता ही नहीं है, it is not calculated, it should be decided, right? So now again one more question here arises, that who will provide us with the loan? This loan can be provided by any bank who has a tie up with the insurance company, or that particular insurance company itself, or the bank of that insurance company. For example, we know LIC, right? Life Insurance Corporation. Now Life Insurance Corporation also provides you with an LIC housing finance loan through LIC HF Limited, which is LIC Housing Finance Limited. So LIC is one company, LIC of India is one company, and LIC Housing Finance Limited is a separate company, right? So here what is happening? This is the insurance company and this is the bank of that insurance company. So in this case, what is happening? One policy holder can get a loan from this LIC Housing Finance Limited company against the surrender value. Which surrender value? The surrender value which is there in the policy which he has taken from LIC, right? And the surrender value has been decided, right? I hope till now this is clear. Okay. Now, one more thing is that let's assume one case where you have taken the loan and you could not repay the loan in time, right? Then what happens in that case? Then the third party, which is the bank, will retain the entire surrender value. That bank will retain the entire surrender value, right? So now what is the crux of this? So if you repay, then you will get the surrender value amount, right? But if you couldn't repay in time, then what happens? The entire surrender value will be retained by the bank only. Now we studied all these things just to understand this particular concept, which is your how to calculate the net total amount of investment of asset, which is defined in section 27 of the Insurance Act, right? Okay. Now the act says that under section 27 it says that you can you can get like okay, the insurance company should have at any time of the year, at any time of the financial year, should have this much of amount of asset with him or with them, right? With the company, right? So now let's understand 4 points to calculate the net total of assets which the insurance company should maintain at any time of the year, right? The first says that sum of the amount of his liabilities to the holders of insurance policy in India on account of matured claims. Matured claims. So it means, now here it says that his liabilities means, now for an insurance company, what will be the liability? What the insurance company needs to pay? Obviously the claims which are to be paid, right? इंश्योरेंस कंपनी का क्या लाइबिलिटी होता है? ऑब्वियसली पॉलिसी होल्डर्स को उनका पैसा वापस करना या फिर उनको उनका क्लेम देना, राइट? सो दिस इज टेलिंग अबाउट दैट पर्टिकुलर थिंग, दैट वॉट एवर अमाउंट ऑफ like how much amount of money the insurer should keep aside just for repaying the claims of policies which have matured till now but the insurer has not yet paid, right? Maturity आ गया है but अभी तक payment नहीं हुआ है. So these are their liabilities which should be kept aside by the insurance company. Now this is the first item. So the second item says, which you have to add in the first item, it says that the amount required to meet the liabilities on policies of insurance maturing for payment in India. Maturing for payment in India. So it says that how much amount of money the insurer should keep for the policies which are going to mature in future. Now how will you understand, how will you calculate this particular figure कि कितने policies mature कर रहे हैं? So for that we have studied forecasting in operations management. That very similar thing, or you can use simulation also for that. There are many techniques which will let you know how much amount of money you should keep aside to repay the claims which are going to arise in future, right? So what is the first thing कि अभी क्या क्या mature हो रहा है, और दूसरा क्या है फ्यूचर में क्या क्या mature होने वाला है, right? Now when you add these two items, you get the gross total amount, right? The gross total amount. Out of this gross total amount, what do you have to deduct? Now you have to deduct two items. What is the first item? The first item is that the amount of premium which have fallen due to the insurer on such policies but have not been paid. So it says that um, वहाँ से आपको माइनस करना है व्हाट इज द अमाउंट ऑफ प्रीमियम which is due for the insurer, like the how much of premium the insurer is supposed to get, but he has not got that amount yet, right? And also the grace period for the payment of that premium has not yet expired. Now, what is the concept of grace days? So, in case of LIC, the grace days mostly range between 1 year to 1.5 years. I don't know about general insurance, but in case of life insurance, this happens, right? So, grace days, matlab, the very same thing, the concept of bill of exchange, what we have studied, grace days, the same thing. If you have not yet paid the premium, then you can pay in between these grace days, right? So, what do you have to deduct from the gross total? Nimisha has joined. Hi, Nimisha. Okay, so what do you have to deduct from here? You have to deduct the amount of premium due, which are due, but not yet paid by the policyholder, and the grace days for those premium have not yet expired, right? So those amount you have to deduct. Why you have to deduct? Because they are obviously they are not include, they are your assets, right? So obviously you need to deduct that. Now um, the fourth and the last item which you need to deduct, and this is very important because whatever concept I made you understand before this, that will be applicable here only. You have to deduct amount due to the insurer for loans granted on and within the surrender values of policies of life insurance maturing for payment in India. Now this is very important that whenever we are talking about this particular thing, it is relevant for life insurance only. Okay, so you have to deduct the amount of loan which is up to surrender value, right? You can take the loan up to the value of surrender value, right? For example, your surrender value has been decided to be 60 lakhs. Now you cannot take a loan of 61 lakhs. Whatever is the loan amount, that should be within the limit of surrender value. So you have to minus the amount of loan up to surrender value if the policyholder has taken loan against the surrender value from the same insurance company. Now it is saying that from the same insurance company. So it is, for the example can be LIC, and obviously LIC Housing Finance Limited. This can be the example. So when you deduct these two amounts from the gross total, you are going to get the net total, right? Now, normal, if we say in easy words, then it will be, what do you have to deduct? The claims will be repaid only if premiums are paid, which means only those claims will be repaid for which the premiums have been paid, right? The insurer has got the premium, right? So you have to deduct all those premium amount which you have not yet got, right? I hope this is clear. Shivani, Rahul, Nimisha, do let me know, is it clear till now or not? Okay, Shivani is saying yes. Okay, now from this particular calculation we have got the net total amount. Okay, net total amount. So out of this net total amount, uh, life insurance business says that, again all these things are mentioned in 20 section 27 only. So if the insurer is carrying out a life insurance business, then out of the net total assets, the insurer has to maintain minimum 25% in the government securities, and this thing is compulsory. वाई कंपलसरी? बिकॉज गवर्नमेंट सिक्योरिटीज का जो सेफ्टी ज़्यादा होता है, राइट, उसमें रिस्क फैक्टर इज वेरी लो. सो द लाइफ इंश्योरेंस बिजनेस हैज़ टू मेंटेन एटलीस्ट 25% इन government securities. Now, the next 25%, or we can say at least 25%, the life insurance business has to keep either with government securities or with other approved securities. When we are saying approved securities, it means low risk debt mutual fund. Low risk debt mutual fund, for example debentures or deposits, or company ka deposit, all those things. Now, you must be thinking why 25 and 25 in both the cases? Because um, the risk is high in life insurance business as compared to general insurance business, right? Because anyway you have to pay an amount, right? So for that reason only, the government has asked for more investment in the government securities. So minimum 25% in government securities, and the next 25% in at least in either government securities or any other approved security. Now, the remaining percentage, whatever remaining, for example, here you invested 30%, here again you invested 30%, because obviously minimum 25% has been written. So the remaining 40% can be invested as per the regulation of the authority. Who is the authority in this case? IRDAI is the authority. Other investments can be done as per the regulations and as per the recommendation of IRDAI. Now, this is mentioned in which section? Section 27A. Now, the next thing which we are going to understand now is the net, how the net total amount shall be invested in case of general insurance business, right? So again, this is similar. Minimum 25% you have to invest in government securities, and this is compulsory. But because I told you that in case of general insurance the risk is lesser as compared to life insurance, so now the second provision says that minimum 10%, at least 10% shall be invested in government securities or any other approved securities, and whatever is the remaining amount, that will be invested in any other investment as per the regulations and as per the recommendation of IRDI. Now, what is the main difference between life insurance and general insurance? Only this amount, right? Now, this is mentioned in section 27B. Now, section 27C says that out of the remaining percentage, remaining matlab ye wala percentage, out of this remaining percentage, maximum 5% can be invested in the companies belonging to the promoters or the promoting company, which means, for example, in case of, we are taking the example of LIC and LIC housing finance loan, right? So in this case, uh, for example, the life insurance, for example, LIC has a net total asset of 100 crores, right? 100 crores. So in this case, what happens? 25 crores, मिनिमम 25 crores फॉर एग्जांपल गया वो आपका गवर्नमेंट सिक्योरिटीज में. Then in case of government and other approved securities, again 25 crores are left. Now your remaining asset is of worth 50 crores. So section 27C says that maximum 5%. 5%, when we are saying, it should be 5% of 100 crores, 5% of net total amount. Okay, so maximum 5 crore rupees should be it can be invested in the companies which belong to the promoters or the promoting company, like whoever is the promoter of this first insurance company. If they are having any other company, so in that case, so in that company you can invest amount, but it should be up to 5% of the net total, right? Out of this 50 crores, you can invest maximum 5 crores in the promoter's company. I think this is clear. Now, the next thing that we are going to study now is section 29, which speaks about Prohibition of loans. Now, we studied that loan can be taken from any bank or the bank of that insurance company, right? Now, we are going to study who are the persons who are prohibited from getting the loan. The first thing is that loan to any third person is not allowed. Now, what do you mean by third person in this case? The person who has not taken any policy, right? Or we can say the non policy holder. Any non policy holder is not allowed to take any loan, right? Obviously this is the common sense, because we are giving the loan against the surrender value. So any person who is not having the policy cannot get the loan. The second point says that the loan on the basis of surrender value of life insurance can be granted to these people. Now you have 2 points here, and these are very easy to remember. It says that against the surrender value of the life insurance, loan can be granted to the director, manager, actuary, auditor, or officer of that insurance company. Of that insurance company, loan can be granted to them. And also the company or firm where above persons are director, manager, actuary, auditor, or officer. For example, one person is an auditor in an insurance company. Now that auditor is having one more company of his own, right, where he's a director. So in that case, loan can be given to that particular company or firm where that person is a director. But while giving the loan, the surrender value of these persons should be considered. Now if the surrender value of this auditor is, let's say, 70 lakhs, then this company or firm where he is a director, the loan granted to that company or firm can be up to 70 lakhs, not more than 70 lakhs, right? I think this is also very easy to understand. Now, now we will understand what are the exceptions to section 29. So we know that our economy has three pillars. One is banking, second is insurance, and lastly stock market, right? So financing between these three pillars should be promoted. So for that reason only, uh, some exceptions to section 29 has been mentioned. Now it says that all the above restrictions or prohibitions are not applicable for any insurer to get the loan to any bank as directed by IRDAI. So any insurance can give the loan to any bank if IRDAI has directed, right? And the second exception says that loan to any holding or subsidiary company of the insurer is also allowed, but obviously with previous approval of IRDI. Now, what are the two exceptions? Loan to any bank, because we have to promote banking sector also, and loan to any holding and subsidiary company of that insurer. Why? Because obviously they are from the same family, so obviously they have to help when any of their holding or subsidiary company needs funding, right? But here again, one more thing is said that the section overrides prohibition of loan to director if following two conditions are complied with. Now, this section overrides whatever provisions are there which restricts giving loan to the directors. So, if these two conditions are satisfied, then loan can be given to the directors. So, loan to directors on his own policy, which means the policy which he has taken for his own life. So, loan to the director can be given on his own policy. Now, the second condition is, obviously we have been studying that loan should be within the surrender value, right? It should not exceed the surrender value. Now, next, we are going to study section 30, which says liability of directors for contravention, right? If loan is given by company to director or any other, okay, so if any contravention has happened or contravention has been executed while providing the loan by the company to director, or any other kind of contravention has happened, then in that case what happens, the penalization is personal, which means whoever has done the contravention, may it be the director or the whole time director or any other director, then in that case the penalty will be levied upon that particular person. It should be personal, it should not be against the company or the firm, right? Now the next thing that we are going to understand is Section 32D, obligations of insurers in respect of third party risk of motor vehicles. Now, um, we know that uh, earlier the motor vehicles were not insured while purchasing the motor vehicles, right? But since the last 4 to 5 years, when the Motor Vehicle Act, I think 2015 came in force, what happened? जब भी आप कोई गाड़ी खरीदने जाओ तो उसके साथ इंश्योरेंस मिलता है. So to promote the motor vehicle insurance, government came up with this rule that while purchasing a vehicle, you're supposed to get the insurance done. But after that, what happened? After the expiry of that policy, people were not renewing that policy, right? So in that case, what happened again? The motor vehicle insurance companies were suffering loss. So to overcome that, government of India came with another obligation or another provision where you have to get your motor vehicle insurance done from time to time. The government of India wants to promote Indian vehicle insurance. So, for that purpose, they want to put a burden on insurance company to promote such an insurance simply by penalizing heavily. If required, then government of India gave the authority to the insurance company that you can penalize the person, right? Or so in that case, what happened? Obviously, there will be a conflict of interest between the insurance company and the and who person who is like purchasing the vehicle, right? Or who is owning a vehicle, right? So in this case, what happened? Uh, so this may lead to harassment of Indian public by insurer, and this thing even happened in the year 2016 and 17. Many conflicts happened between the insurers and the policy holders, right? So again, this particular rule by the government of India also became a failure. So after that, government of India came with another very interesting provision, which says that every insurer carrying on general insurance business. So now, not life insurance, we are talking about general insurance business. Every insurer carrying on general insurance business shall underwrite minimum percentage. So this 26% is not given in the book, but it is 26%. At least 26% of the insurance business in third party risks of motor vehicles as per the regulation, which means the company who is carrying out a general insurance business, if that company is having a business of 100 crores, so out of those 100 crores, or we can say if the company is having a policy of is having 100 policies, for example, let's go by numbers, okay, 100 policies. So out of those 100 policies, at least 26 policies should be regarding the motor vehicle insurance, right? So this way, what happened? Every person, every employee working in the insurance company had to get their motor vehicle insurance done just to satisfy this 26% of limit, right? And again, all the government employees had to do the same just to satisfy this 26% limit. Now, government put the ball in the court of all the insurance companies only कि आपको इतना कराना पड़ेगा, अगर आपने नहीं किया देन यू हैव टू गेट अ पेनल्टी ऑफ rupees up to 25 crores. Penalty up to 25 crores you have to pay, right? So this is something which, if you fail to comply with the regulation, and this is relevant for whom? Only for those companies who are dealing with general insurance business, right? Now now let's understand section 33, which talks about the power of investigation and inspection by authority. So who is the authority? Obviously IRDAI is the authority. Now, according to this section, IRDAI at any time of the financial year can direct any person as an investigating officer. So IRDA कभी भी एक person को investigating officer appoint कर सकता है, obviously in writing, or we can say by written order, to investigate the affairs of any insurer or insurance intermediary or normal intermediary, right? So so who are the eligible persons here whose investigation or inspection can be done? Any insurer, any intermediary, or any insurance intermediary. So now, what is the job of this insurance of this investigating officer? The investigating officer has to report to the IRDI on the investigation on a regular basis. Now, the investigating officer, if he may finds it suitable, then he can employ an auditor or an actuary if needed. Why an auditor? Because obviously audit and actuary, these are two very important aspects when it comes to insurance business. So to investigate the business affairs of any insurance company, obviously one person will need the help of an auditor and also an actuary, right? Now, this is one important point, because you may get MCQs on this, which says that all expenses incidental to any investigation shall be borne by the insurer or intermediary or insurance intermediary, and these expenses shall have priority over the debts due from the insurer. Now, it means that the insurance company has certain debts. Like the insurance company has to pay some amount of money to some person. He has certain liabilities. Now, now let's say IRDI has appointed one person as the investigating officer, and in this process of investigation, some expenses have been incurred, right? So when it comes to paying of the money, so in that case, the paying of the expenses shall be given the first priority over the debts which are due from the insurer, राइट? इंश्योरर के डेट से पहले उसको एक्सपेंसेस रिगार्डिंग दिस इन्वेस्टिगेशन वो सबको पे करना होगा, राइट? आई होप दिस इज क्लियर बाय नाउ. Okay, now section 40. Okay, Shivani has written clear. Now let's understand section 40. Prohibition of payment by way of commission or otherwise for procuring business. So here it says, यहाँ पे important क्या है? The important word is commission, right? So in this case, an insurer cannot give any commission or remuneration to any person. The rule says it cannot give any remuneration or commission to any person, but he can, the insurer can give commission or remuneration to these three persons. The first is insurance agent, the second is any intermediary, and third is any insurance intermediary, right? This is very easy. Okay. Now, from this particular section, you can get questions of 2 to 3 marks. So it says that appointment of insurance agents under section 42. How insurance agents are appointed. So, any insurer can appoint any person. Any insurer can appoint any person to act as an insurance agent for the purpose of soliciting and procuring insurance business. But that person should not have the following disqualifications. The following disqualifications. Now, five disqualifications are there. One is that person should not be of unsound mind, obviously. That person should not be disqualified under moral turpitude, which means moral ground पे uh, वो disqualified नहीं होना चाहिए. Next point says he should not be an Undischarged insolvent. Undischarged insolvent, the meaning of this we all know. The fourth point says that person should not execute any fraud in insurance industry before this. Obviously, you cannot appoint any fraud as an insurance agent for your company, right? And lastly, that person should not be disqualified by IRDI periodically. That means he should not be disqualified in that period for which you are appointing him as the insurance agent, right? Now, the third point simply says that one person can be an insurance agent, but he can take the agency of one company from one field, which means one person can be an insurance agent for one life insurance company, for one general insurance company, for one health insurance company, and for one of each other monoline insurers. Why? Because obviously, if you're going to sell life insurance of your Kotak Mahindra or life LIC, दोनों का अगर आप सेल करने जाओगे then obviously conflict of interest will be there, right? So he can be an insurance agent of different companies, but all those different companies should be working in different fields of insurance, right? Now, the last point says that one person should have frame of work that so that no conflict of interest is allowed while representing more than one insurers for whom he is an agent. Obviously, that person should have a particular frame of work, एक दायरा होना चाहिए जिसके अंदर he is working, right? So that there should not be any conflict of interest between those insurers or those insurance companies whom he is representing, right? Now, next point says section 42A. It says that prohibition of insurance business through principal agent, special agent, and multi-level marketing. Okay. So this particular point is very interesting. Multi-level marketing क्या होता है? MLM. You must have heard this company called Amway, right? And there are many other companies whose agents, they come to you and they'll ask you to invest some money in that, and they'll say you have to get four more people in this and all those things. हाँ, members बनाकर वो जो बोलते हैं कि अरे आप क्या गाड़ी चला रहे हो, आपका बहुत आप पैसे कमा लोगे 4 साल में, तो यही होते हैं MLM वाले, मल्टी लेवल मार्केटिंग कंपनीज, राइट? So it says that no insurer shall, or on after the commencement of the Insurance Law Amendment Act 2015, can appoint any principal agent, any chief agent, any special agent, and transact any insurance business through them. Which means one insurance company cannot do any insurance business through some other people, through some principal agent or chief agent or special agent. Insurance agent के through business can be done because they are recognized by IRDAI, but through any unauthorized person you cannot conduct any insurance business. No person can induce any person to renew, continue, or take out an insurance policy through MLM scheme, which means that you cannot appoint any person or you cannot force any person to get like हमें चार और पॉलिसी होल्डर्स ला के दो जो लोग हमसे पॉलिसी खरीदेंगे, राइट? यू कैन नॉट डू दिस पर्टिकुलर थिंग विथ एनी पर्सन. सो दिस इज द prohibition against those people. Okay, now this is again one interesting thing. uh, you may get MCQs regarding this, or you can also get questions of 3 to 4 marks on this. This is section 45 and this is an important section. Policy not to be called in question after 3 years, right? After 3 years. So to understand this, let's take an example. Mr. X is there, who is a policy holder, and he had hidden the fact that he had certain disease which may lead to his death, right? So on his death, the compensation was granted because he had hidden the fact that he had some disease. So obviously the compensation got granted to him. But later on the insurance company got to know that this particular fact was hidden from the insurance company, right? So in this case, obviously, this is the right of that insurance company to question the legal representatives or nominees or the family members of Mr. X, that why you hid the fact from us. And the insurance company can get them sued in the civil court, right? But it can be done within 3 years. Like uh, this question can be done within 3 years, right? Within 3 years from the policy, from the date of policy. So it says that insurance company cannot question this after 3 years on any ground. On any ground you cannot question this after 3 years. Now this 3 years can be calculated from the date of policy, right? So what is the date of policy? To like to consider the date of policy, we have to take the latest date of all these four things. What is that? Date of issuance of policy, date of commencement of risk, date of revival of policy, date of rider of policy. Now what is issuance of policy? Just date पे issue हुआ था. What is commencement of risk? Again, that is mentioned in the policy. Date of revival of policy, which means if you have renewed the policy. And date of rider of policy, I am not very sure about this rider concept, so I am not saying that. uh, if you want, you can remember this, but I don't think questions will be like this deep, right? So after 3 years the question can be done to the insured person, or to the legal representative, or the nominees of the insured person. On which ground? On the ground of fraud, right? Obviously, here misrepresentation has happened. Here Uberimia fiddle has been breached, right? So question can be done within 3 years, right? Now, in this case, the next point says that insurer shall have to communicate in writing to the insured or the legal representatives of the insured about the what on what ground this case has been done, or this question has been arised, and what are the materials on which the life insurance policy is to be repudiated or rejected. Repudiation का मतलब होता है reject कर देना, right? So the insurer has to intimate this particular thing to the insured or to the legal representative. Now this particular section is valid for life insurance and health insurance, right? Because obviously um, this can be done for because here it is mentioned that it can be done for life insurance, which the life insurance policy has to be rejected or repudiated. Now the next point says that in case of repudiation or rejection of the policy, uh, it can be when it can be done on ground of misstatement or suppression of the material fact. What are the cases where the rejection of the policy can be done? On ground of misstatement or suppression of a material fact, and not on the ground of fraud. Not on the ground of fraud. The premiums collect. So if it is okay, so if it is done on ground of misstatement or suppression and not on the ground of fraud, then in that case what happens? The premiums collected on the policy up to the date of repudiation shall be paid to the insured or his legal representative within 90 days from the date of repudiation. So it means what? If the rejection has been done on the ground of misstatement or suppression of a material fact, but fraud has not been there, so in that case what happens? Whatever amount of premium that has been collected up to the date of repudiation, it shall be repaid to the insured or to the legal representative of that insured within 90 days from the date of repudiation, right? Now these are some very small sections which we will complete today itself. Now this is speaking about section 48A. It says agent or intermediary not to be a director. So this section says that no insurance agent or no insurance intermediary shall be eligible to be or to remain a director in the insurance company, which says that uh, if you are acting as an insurance agent, then in that case you cannot remain a director in that insurance company. But IRDAI may permit an agent or intermediary to be on the board of the insurance company, subject to certain conditions, that because that protects the interest of policyholders. But IRDAI can permit that particular person who is an agent or intermediary of that company to remain on the board, so that he can provide there with some valid points which will protect the interest of the policyholders, because obviously the insurance agent is having the client facing job. He is facing all the policyholders, so he is more known to what are the issues of the policyholders. So for the interest of the policyholders, for the protection of the interest of the policyholders, that person who is an agent or an intermediary can be on the board of that insurance company with the permission of IRDAI. Right? Now, the next point is section 52, which speaks about prohibition of business on dividing business. Now, uh, what is the meaning of dividing business, that we will understand. Now, let's say this is an insurance company. Okay, we have 5 minutes left. We will complete that. Insurance company is providing the policyholder with some main compensation, right? Now, whatever is the main compensation, it should always be absolute or fixed. If you are supposed to get 1 crore while maturity or while getting the cover, so it should be absolute and it should be fixed. It cannot be variable or contingent. If it is contingent or variable, we are talking about the main compensation. If it is contingent or variable, then this particular thing is known as dividing business. So that is not allowed. For example, here in this case, one LIC is there where you're paying a premium of 15,000 per annum, and at the end you're going to get a cover of rupees 1 crore. So this value is absolute or fixed, right? But when we are talking about the surrender value, so in that what happens, for example, after 2 years you are surrendering, so your surrender value becomes 5 lakhs, which is absolute. Plus, I told you in the beginning of the first class that the insurance company adds some bonus along with the premium amount while repaying you the money. So this bonus amount is not absolute, right? It is not fixed. So this bonus can range up to 95%. So 5 lakhs plus almost 5 lakhs. So here what happens? It is not absolute but not contingent also. You are going to get a certain percentage of bonus which is not fixed, but it is not contingent. It is not dependent on any condition or any contingency, right? So here it is not a dividing business. But when the main compensation, which is 1 crore in this case, if this 1 crore becomes variable or contingent, then in that case it becomes a dividing business. Contingency on benefits secured, whether partly or wholly, is known as dividing business, and this is not allowed. Right? I hope this is clear. Now, section 64C, it speaks about councils of life insurance and general insurance. Uh, so, what is council? Councils are the representative bodies of insurers. So, for life insurance, there is Life Insurance Council, and for general insurance, health insurance, and reinsurance business, General Insurance Council is there. So, it is for all these three sectors of business, insurance business, right? So that was for this class. We have studied so many things in today's class. We didn't even revise what we studied in the last class. So Shivani, Sohil, Rahul, Nimisha, um I hope you all have studied. You could understand what I taught today. And Shivani, do send me an email on my mail ID. I will provide you with my number over there. So do let me know whether you could understand everything or you have any doubt. Okay, Shivani has written clear. Okay, nice. Shivani, did you take any class, law class before this, or you're doing self study for law paper? Oh, you have taken 2 years back. Okay, okay.